time.
I just wanted to talk about the short position you have right now.
Okay.
I think you could be completely right. Everything you've ever said about it, you could be completely right, yeah? This stock could still go to 50, and you have no defense.
Do you think I'm like brand new to investing? Are you telling me something I don't know? You think I've never been in a short position before?
The way you're acting is making it seem like that, yeah.
Really? What were you doing when you were 17?
I'm sure a lot less than you. What were you doing?
No, tell me the answer.
No, I'm asking, what were you doing?
I'm asking you a question, not the other way around. What were you doing at 17?
Working at a restaurant.
Uh-huh. And how old are you now, sir?
22.
I see.
How old are you?
Before you give grown men advice, why don't you grow up a little bit yourself? 22 years old. You're probably still working at the restaurant. Trying to give me advice? I see you haters. I see you haters having fun. That's cool. I got something for you. Don't worry. I think it's important to always remember that a stock is just a 4-letter financial instrument that doesn't have to do anything. It doesn't have to correspond to reality. It doesn't have to be something useful or not useful. And I remember the dot-com bubble where there were companies that their products didn't work. They were barely companies. They were just set up. They were literally set up just to take advantage of the dot-com bubble.
Right? Yeah.
So, if you keep that perspective, it sort of helps you in some ways and hurts you in others. It helps you realize that there are companies in the market that are truly worthless, and they're there to help executives, do stock sales. If you look at somebody like the CEO of 𝗕𝗏𝗘𝗕𝗓, there's more money than the guy could make in 100 lifetimes. The guy's putting together $15 million. It's, he's worked years for this, and this is his payday. But for the rest of us, we started looking at this like, I would never make my career in quantum computing for obvious reasons. A lot of people have tried and failed, but this guy kind of got lucky. I was talking to a quantum computing company that went bankrupt just before Google Willow. And I was actually considering buying them out and taking them public again, because they're actually publicly traded, but they went bankrupt. And 𝗕𝗏𝗘 was going to go bankrupt. But the Willow bubble happened and the stock went up, and now Barrett's, or whatever his name is, gets to sell all of his stock and, try to pump it up further and get more stock grants and sell that. But the reality is, the stock market for him is an liquidity exit tool, right? Yeah. That's the function it's serving for him is, how do I, put the input to the machine is pump, and the output is personal money for me. And whatever I have to do to get the pump going, I'll do it. And, part of it is, piggybacking off of, the NVIDIA and Google, various news drips and drabs that come out about quantum. Part of it is capitalizing timing wise on a huge sea of liquidity in a bubble. A lot of people who are longs in retail, they'll literally do stuff like Google, what is a good stock to buy or something. Or they'll go to barons.com or Yahoo Finance and they'll just look at what's made the news and they'll buy whatever stock is on their screen. They'll read 2 or 3 articles. They'll be like, okay, I'm busy. I have to go back to my day job. What's going on out there? Imagine if you're a dentist or something. If you have liquidity, you tend to want to gamble with it. Even people who have sold businesses or whatever, it doesn't really matter. It's kind of like human nature. And if you go to Yahoo Finance, I'm sure you can find an article about quantum on there pretty much every day for the last month or two. And you look at it and you don't know any better. And you basically say, this sounds cool. This sounds like the future of computing. And,
right. AI, quote unquote. Yeah.
Sure. And I missed NVIDIA or I missed AI. So let me get this thing. And,
right.
I think what quantum really tells you is nothing about quantum computing. And it tells you everything about liquidity, because I can show you a chart of Fartcoin and superimpose it with Rigetti, and you would not be able to tell the difference. All that you would be able to tell is that there's been a lot of people interested in revaluing this company very quickly, and nothing has changed in the value of Rigetti at all. I mean, the CEO has literally told you that. Nothing has changed in the value of Rigetti, but it went from 1 to 13. And certainly nothing's changed in the value of Fartcoin because it has no value. So it's just a question of how much people have free capital and they're willing to speculate. So these stocks are more barometers and mirrors of reality than they are reflecting any kind of business fundamentals or something like that. And shorting plays a small role in both liquidity and alpha. Normally, short sellers add to alpha by arbitraging prices. So they try to push expensive stocks down. They don't try, actually. They just happen to do it because they're selling. Yeah. And if anything, shorts kind of don't want to have any market impact like any other market participant. And so by shorting, they tend to normalize prices. But in this case, in the current environment, shorting is kind of, very carefully done. And, short capitulation does happen. It tends to be transitory. But I think usually when something's a quote unquote short squeeze, it's mostly a long squeeze. Longs get greedy and longs get, they start to sort of have this self-realization where look at GameStop. I mean, the reason GameStop was able to go to 400 or whatever it went to was that the longs temporarily at least said, I'm not going to sell. Then they, of course, decided to all sell together, partially because a falling price got some of them scared. And, the same thing will happen here, but it's just one of these things where it's a psychological question of musical chairs. And right now the music is playing, so no reason to go sit down in your chair when the party's up. But when the music stops playing, whether that's a bad GDP number or a rough earnings season or whatever, could just be 6 months goes by, a year goes by with no quantum computing innovation, right? We haven't seen any new quantum computers from IBM, and they promised bigger quantum computers and higher fidelity quantum computers. Nothing's happened. We've also been promised that from IonQ, and nothing's happened. So the state of quantum computing is not very different from it was a year ago. And if another 6 months goes by and we're still dealing with 100 qubit quantum computers with no logical qubits and poor gate fidelity, you would think people would get bored or move on to something else. Somebody mentioned rare earth mining. That excited some people, but not nearly enough as quantum computing. Some other people are interested in nuclear. Some people are interested in, there's always, Kramer used to say on his TV show, I never heard him say this in real life, but he used to say, there's always a bull market somewhere. Have you heard that? Him say that? And it's sort of like the average retail investor, ill-informed retail investor, is looking for that bull market somewhere because, they want the eye-popping return, and chasing whatever, bull market may be around is kind of what they're up to. And that's sort of the nature, of what, the average speculator is doing. There's no institutions in these stocks other than the market makers that are forced to buy the stock when they're short the calls. So, and I've even talked to a few of those market makers in the last few days, and, there's no desire on their part to be involved in any of these stocks other than for the arbitrage of those trades. So to me, I do think most of the retail long investors will hold the bag at the top, but a few smart investors will sell and say, you know what, I made my double, I made my 2x, 3x, whatever, and I'm out, and they're the smarter investors of the bunch. But I think a lot of people who get into these stocks, they don't just want the next NVIDIA, they need the next NVIDIA. Because they have, well, they only have, $1,000 or $5,000 in the investment. So it's not going to make them rich unless it goes up 1,000x. It might take care of a few bills, but it's not going to make them rich. And, I'm sure there's some people out there with 50,000 or 100,000, in the stock. But, even then, I mean, the more money in the stock, generally, the more people are willing to sell because, if you actually do have $1 million in this stock, you're sitting there thinking about locking in your gain. Now, some people ride it all the way back down, but I think the more capital you have, the more likely you are to sort of sell and get out. But very few, people are actually going to hold it very few people are going to sort of time it well. I think most people who buy these stocks, again, they're hoping and thinking they will get 1,000x out of it. People who bought The self-driving car stocks did that. The 3D printing stocks, the dot-com stocks. There are people who are long eToys and like other garbage dot-coms, and they thought that on the way up, they were like, I'm never selling this. This is the future. And they were wrong. Like 3 or 4 companies have been like that over time. You know, NVIDIA, Apple, Microsoft, you know who they are. But the vast majority of stocks have never done that and never will do that. So you're sort of gambling that this is a 1 in 20,000 chance that you're going to be, you know, vindicated and get, you know, a 10x, 100x, 1000x, which, you know, is just so unlikely. And in this case, you know, practically 0 chance.
Do you think there's like rogue hedge funds, or not rogue, but just hedge funds that are maybe not as well known that are playing this game because they can see that perception that's going on?
I don't think so. I'm going to let you go now. Thank you for calling. I don't think so with respect for like somebody who would go long the stock because there's a lot of momentum and ride the wave. There are people who do that. They generally don't stick around and they don't do it with huge positions. They'll do it in a more distributed way. So like quant funds are long momentum generally. And so, you know, there tends to be like a momentum, just trying to find some, but even momentum longs tend to get out.
Man, how are you?
I'm okay. I'm swimming in losses right now.
I'm sorry to hear that.
Yeah, it's brutal. It's quantum. Well, these quantum computing.
Oh, your quantum computers the longs are getting you?
Yeah, dude. The stocks are 40, 20, 30, 40, 50%. No.
There's some business there. There's nothing there.
There's nothing there, but.
In 10 years, it's going to be very exciting. But today, there's no there.
Can you call around the shop and see if you're hearing anything, or I don't know what IonQ, IONQ, and then D wave, yeah, QBTS. I'm curious what QBTS. I'd be curious if do you ever do like different custom notes for clients, like for speculators, not just naturals, like somebody who wants to, like, I guess like Leap or some other. I have this, and we're into the trade, you know, think single digit millions, and yes, we're short. Correct, exactly. And what we'd like to do is, conceptually, we want to be short, but we also, I guess, like, I'm willing to sell vol, if that makes sense. The vol is so jacked. I'm just trying to come up with like a structure for the trade that would make sense. Let us participate in most of the downside, and then also try to not get carried out, I guess, if... Yeah, I mean, look, part of the trade is you're willing to take pain, but is there a way to put this on? I mean, do you remember the 𝗤𝗏𝗄𝗎 situation?
I do.
You're older than me, but that...
Dude, I remember it, yeah.
You know what this guy asked me? This guy is sitting on 3 or 4 billion. He says, Martin, is this stock being manipulated? 3 or 4 billion, famous art guy. And I'm sitting there saying, no, stocks aren't manipulated. It's 2025. And he goes, are you sure? And I said, the only time I heard of this was 2000, when Tiger had to quadruple down, not double down, quadruple down on copper, because copper was being hoarded by 𝗤𝗏𝗄𝗎. 𝗤𝗏𝗄𝗎 didn't know that copper was being hoarded. They had a rogue trader. And
which was a very common theme, you'll remember back then.
Yes.
They weren't at the first, but they were around the last.
Well,
we had a couple.
Remember
the
SocGen.
The JP Morgan whale.
The JP Morgan whale, SocGen, had Jerome Curvile.
Yeah, JP Morgan whale.
UBS had somebody, I think, too. Wasn't Jerome SocGen? I didn't think that was you guys.
Oh, it was Jerome SocGen? So our guy he had been back office guy, and they loved him, and they gave him a junior role on a desk.
So he was mad.
and he, because he knew how to hide stuff from the cage, from his cage days.
Oh, you're right.
And he was able to run it up to a $6 billion hit.
before anybody even realized $6 billion was gone.
And then he won in court. He got his bonus because of the French labor laws. Even though he lost $6 billion, even though he got fired for cause, they're like, yep, still gonna pay the guy.
So I wonder if there's any chance that's happening here, because it's just so weird. This is more traded than NVIDIA. And it's not because of me. It's not. And I talk. Well, if you hear somebody say that, that would be interesting. But I talked to Citadel. I talked to Jane Street. I'm talking about the broker-dealer side. Because the hedge funds, they're not going to touch this with a 10-foot pole. But the broker-dealers, the theory out there is that they're playing games. And they're, when allegedly they did the Tesla gamma squeeze, right? Where they had natural buyers coming in, buying calls, in the money, out of the money. Mark said he thought it was 100% real. And obviously I take his word about trading above over almost anything. But personally, I was in jail and I was sitting there saying, gamma squeeze is not real. Okay, at the end of the day, these guys want to be delta neutral. If anything, they're going to dampen the effect, not increase it. But the gamma squeeze theory has become so popular. The theory out there among some quants is that they've automated gamma squeezes now. And that they are intentionally gamma squeezing the stocks because they know it's going to cause max pain for hedgies. It's going to be great for retail. Retail will double down because they are, being fed, what they're already winning. So, I don't know. It's, to me, if I talked to Citadel Securities, I talked to Jane Street, they both deny, being behind any kind of like squeeze or automated squeeze. But that is kind of one concept. And it doesn't even have to be them. It could be a bank too. Banks are the OG market makers.
But I just wouldn't be quick to dismiss it as being, quote unquote manipulated. I think, especially with the speed and the rapidity and the algo, it's way more prevalent than people really appreciate. And the gamma squeeze is just one of the many bad tools in the dirty trick tool bag.
Yeah, no, that's true.
There's a lot of dirty tricks.
No, the borrow desk is one of the dirtier tricks.
So we just did a.
Wow, really? What's the ticker? I see it, yeah. Oh wow. That's insane. It's hard to believe that somebody would put that.
Squeeze, algo, market maker. Yeah, who's the native buyer? Who's the natural buyer of something that's not going to be working for 10 years?
Well, it's funny because I've been looking. So I've been doing this a long time. So have you? I was looking for. You remember some of those really old shorts we did like 15, 20 years ago? Celadon and.
The Celadon was the filter for the.
No, that was Vital.
Yeah, that was your best.
Thank you. But some of them, like Mankind, I could find little longs. I could actually find them and talk to them, and they were on message boards.
People love the old buzzer because he had done something with insulin pens or something, right?
Yes, he had been successful before.
You jumped him at a conference before he even said a word.
It was, but that guy had a following. God rest his soul. He passed away.
He made the insulin pump like teeny tiny, right?
He made the first insulin pump and the first cochlear implant, and I still went after him.
But he also refined the pump because the pump used to be like the size of a loaf of bread, and then he made it the size of
no, he's a genius. He's a genius. God rest.
But you're right. He's an industrial engineering genius.
No, the hubris was that he could do anything, and
yeah, well, they loved him, but so it was a different world, though. First of all, the computers are not nearly as prevalent. Two, the volume wasn't nearly as prevalent, and look what those did: GameStop and AMC. These stocks had no business, no nothing, and smart people were like, look, we're just going to write it down to zero, and then even close out the trade.
Well, that's the thing. I mean,
it's in their face.
the Tiger Cub is dead. You know, Gabe. I knew Gabe when Gabe was at North Sound, and North Sound, if you don't recall, was one of the many Tiger Cubs. It was actually bigger than the firm I was at, and I used to talk to them quite a bit. And Gabe went to work for Stevie, and then he went to start Melvin. But Gabe is an OG Tiger Cub. Like, he doesn't cover his shorts. He just shorts more. And he stared down all of Wall Street Bets, and he lost. And there are no more Tiger Cubs that will do this anymore. Like, the pod shop stunt, like, when you're at a pod shop, they don't even ask you. They just wipe you out. And they say, thank you very much for playing. Here's your pink slip. Next trader, please step up.
You're liquidated before you know.
Yeah, and
Also, once you come back, your card doesn't work. Your pad's been liquidated. You call upstairs, hey, don't worry about it. My pass isn't working. Don't worry about it. We'll come down and get you. You see security coming down with a box. Thank you. Thanks for playing.
no, next gambler, please step up.
We've already realigned your portfolio. Yeah. I'll make some calls, and then I'll check on a structured note here for with not 100% coverage. You want to participate in the down, but you just don't want to blow it up.
No, I think we're willing to blow the whole note out. I think it's just a function of having, like, I almost don't want all the downside. You know, like I'd be happy to cover, like INQ's at 48. I'd be happy to cover it at 10 or 15 and write a put there, if that makes sense. And then,
If you think it's going to pop.
what's that?
10. If you think it's going to pop at 10, yeah.
Yeah, like I think there's some bottom to it, obviously, but that's 80% away from now. So I don't know that it even matters. But I think the reason the note's interesting is you guys can hold inventory and I don't have to worry about P&L. I just worry about the end of the trade, not sitting there being nervous about margin or being nervous about anything. You guys hold it all. And then with respect to hedges, it's hilarious because these guys are supposed to be in there controlling, sort of controlling the price, but with every hedgie on the sideline, it's basically impossible for anybody to like stop one of these trades. If anything, it's fodder for more explosive, kind of directional action, unfortunately. You know the CEO of D-Wave lives in Miami Beach? The company is in Canada. It was 10 years away 10 years ago. You should see I won't even tell you what the INQ guy's doing. He's printing stock to buy out other companies with his paper. That's what yeah. Oh my God, that's exactly.
You should, that's the room you should be floating. They're all going to shift over to Bitcoin buyers.
That would be bullish. That's better than this.
Do you think so?
I think if
the loot out of everybody, go buy Bitcoins.
I think that'd be bullish.
Yeah, maybe. Yeah, for these buyers, it might be accretive.
I don't know what to do. Well, I'll catch you on the flip side. See you. Thank you.